This is Chad Stayskull with Eagle Wealth Management. I'm here with our educational economic update for January 2018. First off, Happy New Year, and we hope it's a blessed one for you. In this month's video, I'm going to discuss some of the major headlines that influenced markets in December. I also hope that it provides you with some insight into what these developments could mean for you as an investor. So, as 2017 came to a close, U.S. markets slipped a bit from their highs for the year. But despite this dip, the S&P 500, Dow, and NASDAQ were each in positive territory for the month and achieved a number of records for the year. In fact, December marked the 9th month in a row that the S&P 500 and Dow recorded gains. The S&P 500 hadn't had a string of performances like this since 1983. For the Dow, the stretched gains were even more unusual. The last run of consecutive months like this was 1959. And the NASDAQ, it also experienced a year of noteworthy gains. In 2017, the index rose all but 1 month, and this was the first time that has ever happened. Overall, each index posted double-digit gains for the year. The S&P 500 gained 19%, the Dow increased 25%, and the NASDAQ was up 28%. But probably the biggest economic event that occurred in December was the passing of the largest tax reform in over 3 decades. At the start of 2018, many changes are already in effect. The corporate tax has now dropped from 35% to 21%. But for most of you, the individual tax brackets have also changed. The standard deduction is double what it was in 2017, albeit that benefit is mostly washed out due to the loss of personal exemptions. In addition to these headline-grabbing changes, the tax bill also included provisions that may affect people's retirement choices, from IRAs to charitable donations. Generally speaking, the tax bill's supporters believe it will encourage business investment, increase hiring, and contribute to wage growth. Detractors, they warn the bill's potential to add at least $1 trillion to the federal deficit could cause issues. Time will tell exactly what lasting effects the new law has on individuals, corporations, and the economy. I can't go into all the specific details here, but if you have any questions about your own financial life, please feel free to contact me, or we will be discussing these tax law changes at our reviews. Of course, tax reform is a big deal, but it's not the only development we experienced in December. In fact, many signs point to an economy that continues to grow. The final reading of third quarter gross domestic product indicated the economy grew by 3.2% between July and September. Data shows the fourth quarter may have had similar growth as well, although we're going to have to wait to receive the initial readings. What we do know is both the existing and new home sales jumped to the most recent readings of November to their highest levels. New home sales grew faster than they have in 25 years. Consumer spending also grew in November, increasing far more than analysts expected. While measures of consumer confidence slipped from the 17-year highs we saw in November, they still stayed pretty high in December. The Federal Reserve seems to agree that the economy is strengthening. Last month, the Fed raised interest rates for the third time in 2017, pushing the benchmark rate from between 1.25% to 1.5%. It also increased estimates of how quickly the economy will grow in 2018. But one soft spot among the data that we received, however, was the value of the US dollar. It ended the year at its lowest levels in at least 3 months. Some analysts expect the dollar could continue to struggle in 2018. As the Fed considers continuing to raise rates and other central banks potentially follow suit, we could see issues. While the economy is not perfect overall, December gave us a lot of good news to round out a year of many record highs in the markets and positive economic data. Well, we look forward to see what's going to come in store in 2018, and we hope to continue to share our perspectives with you along the way. Stay tuned for next month's video update, where we'll have more annual data to discuss. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call at 541-330-0220. We're happy to talk. That's it for this month's educational economic update. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of January 2018.